Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a beautiful and sunny Denver, Colorado. Today, joined by my friend and Schwab Regional Investment Strategist, Rachel Deshelle. Good morning, Rachel. It's great to see you again. How are things?
Good morning. Great to see you as well. Things are great here in sunny, gorgeous Greenville.
That's great to hear. It was an interesting weekend, huh? We actually had some headline news, some market risk, and markets are moving a little bit, but maybe not the way people expected. Rach, what do you think?
Exactly. There's a lot of news that happened this weekend, a lot of headlines to be talked about, but seeing muted movement on the morning. So I'm excited to just dive into some of these charts and look at the trends that we've been seeing.
Yeah, as am I, of course. It's always interesting when we get a little bit of volatility. We'll see to what extent we've gotten that volatility on the open here. But obviously, markets are moving over the weekend on the strike on Iran. So we've got plenty to get to. Please say hi to our friend Mike Fairborn there in the chat. He's going to manage things for us. Of course, Rachel and I will keep an eye on things there as well. We want to hear from you. Feel free to post for the duration of the show. Don't forget, you can follow Mike and me on X. For Mike, it's Mike Fairborn CS, and I, of course, am at Kevin Horner CS there. We try to post for you throughout the week, give you some things of note, maybe some charts of interest as well. So take a moment and follow us there if you're not already doing so. We'll get to some disclosures so that we can move into our charts, everybody. Remember that our conversation is exclusively for your information and your education. We do not make recommendations here. We do not endorse a specific approach to trading the market, though. We want to remind you that technical analysis is merely a piece of your decision-making puzzle. We utilize technical analysis here as we evaluate price action, of course, but the reminder is not to base any decision you make really off of one single data point. We like the idea of incorporating multiple pieces of information to aid us in our decision-making process. All right. Beyond that, we'll remind you of our agenda, which does begin with a top-down approach, meaning we'll hit the broad indices. We'll look at the S&P 500. We'll look at the NASDAQ 100, the Russell 2000, the semiconductors, and then we should work through some industry and sector groups as well. Today, we've got a few stocks in the news we want to touch on also. So as usual, especially on a Monday, as we try to set the table for the week, there's plenty to get to with all of you. Rachel, as we do here, we're going to start out with the S&P. Now, the open here this morning is pretty darn flat. We had some volatility. I think I saw the futures reflecting somewhere in the neighborhood of off 1.5% at our weakest in the S&P, the NASDAQ 100 over the weekend here. But it seems like the market is trying to take all of the weekend events in stride at this point.
Yeah, it looks like the market's just trying to take some time to just process everything that's been happening. And we're seeing that as the S&P nearly, it's touching, it's bouncing, whatever you want to say, right off that 20-day simple moving average, which acted as resistance on that sell-off that we saw in March and April, and then ever since has been acting like a clean line of support. So we'll kind of have to see as the market digests and process some of this information today, if price can hold above that shorter term, that 20-period simple moving average there in orange.
Yeah, I think that's an important level for us. Obviously, we've been talking about it in this show quite a bit. If you're a frequent attendee, you've heard we've been above the 20-day now going on 8 solid weeks. So we go back to the jump here on April 23rd. So there you go, everybody. 8 full trading session or 8 weeks of trading sessions holding the 20-day. Maybe getting a little tired in here regardless. So a close below the 20 would be a departure from what we've seen and something that some traders will make note of. Rachel, are we still maybe from a technical standpoint eyeballing the ledge here as a potential support if we do break down below the 20-day here? Somewhere coincident with that gap move we made on May 12 is what I'm thinking. How about you?
Exactly. That's the level I'll be looking at as well if we do see some more reaction or more digestion from the news that we saw over the weekend. I think that gap ledge support, around 57.80 is going to be one where traders will be eyeing just because we know, and there's no hands that, or I guess no shares that exchange hands in those levels of those massive gaps, that what we saw,
Right.
they typically act as a magnet for price in the future. So if we did see somewhat of another type of headline event, or just that price being digested from that news, we may see a pullback to 57.80 or so, which is that like a 5% move, would you say, Kevin?
Yeah, let's
measure
draw
that out?
well, you know how much I prefer to cheat and not to actually do the math on these things, Rach. So let's just draw a line from about 59.67 to that ledge at 57.80, and it looks about 3% is about all. And boy, is that limited in scope, isn't it?
Yeah, that's very limited. So not even seeing a 5% pullback, 3% is very, very minor. So it could be something that makes sense here given the structural uptrend that we're seeing, and then just the news headline that has came out.
Yeah, I think so too. And you called it out as well. Obviously, there's nothing to suggest that what has happened this weekend is the extent of all that can happen. As we know, we should absolutely be prepared for headline risk to continue to play into market movements over the coming days and weeks. And so again, as usual, my encouragement is to know the levels at which you as a trader, you with your portfolio, your existing positions for trades, where you want to take action. Knowing that is going to make it a lot easier in the moment to make your decisions, everybody. Now, everything that we talk about here is just based on that exactly. Where do we think we can fall if we took out the 20-day? Is 1 day closing below the 20-day sufficient for you as a trader to lighten up your load? Or would you think you need 2 consecutive closes below the 20-day, maybe a third consecutive close below the 20-day? Some traders need that semblance of confirmation to aid them in their decision making. And of course, putting that down in your playbook so you know what you're doing in advance can be really, really helpful for your individual decision making. Now, of course, Rachel, I wouldn't be having fun here if I didn't put a Fibonacci level on this. So let's just quickly draw from our level here and see if we got any confluence. And I think we do. Notable, the 23% retracement of the entire rally ceases here at this 57.80 approximately. So we've got a confluence of data there, Rachel, as well. Not to mention the gentle upslope to the 50-day moving average coming into that zone as well. It strengthens that area as potential support, but by no means does price have to stop falling if we get a breakdown. It doesn't have to stop there, does it?
No, it doesn't have to stop there, but it may pause there, so to speak. So, and like you said, it's funny how math works out in that way when we have that confluence of evidence kind of pointing towards a certain area that could act as a price magnet, or price could find support at. And we'll notice too, the 200-day moving average is just above that level as well. So that's 3 different, I guess, pieces of evidence or pieces of confluence that kind of work together that could support that could be a level. And I saw a comment in the chat about the Horner rule, Kevin, especially with just the kind of like those 3 closes above or below that certain level. And I know, Kevin, that's something that you talk about all the time on here. That's his way of looking for confirmation, is those 3 closes above or below that level that you're watching.
Exactly that, Rachel. As you know, I'm not a fan of telling you what to do, but rather giving you the framework for thinking about it and allowing you to define your own confirmation. I think that's the key here. Is the 3 days below a 20-day reason enough to sell some? Is it 1 day? Is it an intraday move? The truth is, for some traders, just 1 day below the 20-day would be enough of a shift, given that we've been above it on 8 weeks consecutively. Not a single close in 8 weeks under the 20-day. So that could be reason enough for a single close to get some traders reasons to start taking a little bit of profit, especially if you've been a buyer as recently or as far back as early to mid-April here. Your returns are likely fantastic, and it's imperative in a trading environment that we work to maintain those profits where we can, everybody. That's the game we play here as traders. So manage those trades as best you can, everyone. It does feel a little bit early for pina coladas, but I'm not one to tell you what to do, Carol. I say go for it. Okay, let's see. good question here on zinc is bringing up. We normally move straight into the Nasdaq, but I think the question zinc has is around the oil. So let's just look at oil because the thought, Rachel, was of course that the conflict would have major impact on supply, most notably. But a couple of the things I've heard of late include that some anticipation of this strike in Iran has led to some of the reduction of the barrels coming through the Strait of Hormuz in advance of this. So there's been a bit of a slowing process in advance, and I'm not absolutely certain as to where we stand right now with the Strait. In fact, it was last I saw, Rachel, there was posited that they were going to close the Strait, but it had not officially been done. And of course, a spike on the news, and now all of a sudden we're basically back to where we were on Friday at the close. So kind of hard to make heads or tails of what's happening here with oil, isn't it?
Yeah, typically it is in this case because typically, I mean, we see this really rally in oil and then we have it calm back down for a little bit. So we'll kind of have to see if history repeats itself or kind of rhymes in that case where we see a little bit of a pullback here after that run up. But I think the levels that stand out to me, obviously we broke through that bottoming pattern, that head and shoulders pattern that I think we talked about a couple weeks ago or maybe even last week, the inverted head and shoulders there. We reached the price target there of our next resistance around, I want to say it was above like 70 or so. And then now we're a little extended from that 200 period moving average, but that 200 period average is still sloping down. So we'll just kind of have to see and watch here with both trend and momentum to see if history repeats itself and price tends to kind of stabilize, or if this blockage in the Strait leads to further upside in oil.
And that's probably what would be required to a certain extent, Rachel, would be the actual closure of the Strait, which would force a different migration path and different shipping paths, of course. So keep your eyes peeled on that because that's going to have a big impact here. But again, initial reaction was a pretty dramatic spike up to the highest we've seen since January here with that over the weekend, and yet it's not currently holding. So obviously, headline-driven market, wanted to make sure we looked at it, but a little bit of a surprise that that we are taking a bit of a breather here, at least off the open. We'll come back and look at additional commodity details here after a bit. Let's move on to the NASDAQ, Rachel, up a little here, 0.1, again, with what appears to be, now granted, we're talking the first 20 minutes of trading, so we're not going to get ahead of ourselves. But if this were the candle that we had at the close today, I think a lot of traders would be very encouraged by that type of a development. What say you?
Definitely, yes. And it looks like we're pushing above that 20-day moving average. So if price action really continues where we have the open near kind of the low of the day and bulls tend to push the price up higher where we have that close above the 20-day, that could be an encouragement, again, that this trend is going to continue, at least in the short term, because it looks very similar to the S&P 500 chart that we just looked at, Kevin. I mean, we've consistently stayed above the 20-day, so it's something that has proved to be evident in this trend. And so if we see that bounce here, it could lead more bulls to possibly enter into the trade here at this level or short-term support.
Yeah, this, of course, becomes an important level. Now, we know about the relative strength, the relative outperformance in the NASDAQ. The big deal difference being the level above. I mean, look at how far extended we are above the 200-day. You've already got the 50 crossing the 2 to the upside, the 200, excuse me. So you've got that potential golden cross development here. And, of course, we've got that same gap level from May 12. So we're looking at the same thing in the NASDAQ 100, 8 full weeks above the 20-day, looking for some sort of departure from that. And that May 12 ledge, coincident with the 50 and the 200 and gap support, looks really, really strong. My guesstimate here, Rachel, would be, again, a 23% retracement of our entire upward move from this low. will be right around that gap level. Let's see if we're right on the money, and we're pretty close. So again, we try not to get too cute with our price action levels, Rach, because we want to be able and willing to allow price action to move around throughout the day, especially on an intraday basis. But it looks kind of like this, doesn't it? Kind of in a range. This would be an area where I think traders would be more comfortable adding or starting new positions in the NASDAQ 100. Of course, the alternative to that would be closes at new highs, would be an area where traders would also say, well, maybe instead we're not going to get that pullback and we're going to keep pushing. Maybe we need a momentum-based play to the upside on a breakout, Rachel. Anything else you might like to add?
Yeah, and I mean, like we talked about, I think that ledge and that confluence of evidence that shows that kind of next level support under that really close 20-day moving average is definitely evident there, and something that traders will be watching if we do pull back to that level and that level holds. But something that's also supportive of a possible pullback too, when we just kind of take away to the evidence approach, is momentum. And we saw with the last high that was made, I guess with that first touch of resistance out of the box, when overbought levels were reached kind of end of May, price made higher highs, but the RSI actually made a lower high, showing a little bit of a bearish divergence there. So we see momentum diverging from what trend is telling us, which could be kind of like that little yellow flag, little warning signal that this trend could be losing a little bit of steam. So to your point, when we draw those Fibonacci's, we look at those confluence of signals. If momentum is giving us a little bit of a push, that support zone will definitely be something we'll watch.
It will be. It's unclear, of course, but it gives us, again, a bit of a plan of attack as to how we want to go if things go this way. That golden cross, as a reminder, is the movement of the intermediate term 50-day moving average crossing the longer term 200-day through the upside. Those traditionally are longer range trend confirmation detail, but they don't commonly result in significant developments as they happen because they are longer term developing trends. So keep that in mind. It's not at all uncommon to see a bullish, or what we call the golden cross, the 50 through the upside to the 200 like that. We don't often see that is immediately resulting in a move to the upside, but often even in the midst of a pullback at sometimes, so we actually can see that. Look at what happened, though, the last time. I find this a little bit interesting. When we had the bearish version of this, where we crossed the 50 to the downside, it happened to coincide with a run into some short-term resistance here, but ultimately we had already seen our low when that had occurred. And so I bring that up because, again, the longer term nature of that developing trend shift really should put us on notice as opposed to an action point. It doesn't mean anything to do right now, is what I would remind people. So, okay. Rachel, let's see how those small caps are performing here. We're getting a little weak this morning, sitting on our 20-day. We have traded through the 20 to the downside, but we are, again, seeing some effort to maintain here, basically holding the lows of the last week, looking for a close above the 20-day, though. So what are you watching on the Russell? Is there a narrative maybe you're paying closer attention to on small caps?
Yeah, the rates narrative is what we're paying attention to on small caps, obviously, because they carry a little bit, smaller cap companies carry a little bit more debt than obviously those larger cap companies that we see, where on the other side of things, they carry more cash. So if we are going to be in a lower rate sensitive environment, we typically would see small caps get a little bit of a lift here just because of those levels of debt versus the cash that they actually carry. And that's kind of what's spelling out here. It's kind of like a narrative versus trend battle, it seems. And especially the last week when we've had headline after headline come out, we've had FOMC, small caps have done nothing but just kind of battle up and down with that 20-day simple moving average, and momentum seems to be kind of flat at that same level too. So to me, it spells a little bit like indecision in this space with small caps. So that's what I'm seeing.
Yeah, much of the same on my end too, of course. Trying to get a gauge for the rate situation has proven to be a little more difficult. I mean, every time we hear from the Fed, it's more on data dependency. Expectation over the next couple of years is still for some cuts, but not the level that many traders were hoping for. And every time we hear about cuts as opposed to actually getting cuts, the market loves to hear the narrative discussion on the potential for rate cuts. That's for sure. Looking here, I think the levels we've continued to discuss are probably going to be maintaining in importance. So we'll watch the 20-day where we're sitting on it right about now. The move down could be to the 50-day. That wouldn't be out of reason. A move that tested and held the 50 would also be a higher low in here, everybody, comparatively to this, compared to these lows as well. So even a pullback to the 50-day, which wouldn't feel great, we know that it would be something about 3.5% or so. That's notable, but it would still be a potential higher low, and thus we could continue to see more upside based off of our move from the lows in early April. So, again, as always, know how you want to act. The 20-day could be all that we need to test here. That would be great from the small cap standpoint if we could just maintain and hold. Even turning this market more green early this morning is giving us a little bit of a optimistic viewpoint here. How about a look at our semis briefly? And we can see we have finally pushed, Rachel, into that zone of resistance that I've drawn in. It's been a significant level for us, hasn't it?
Definitely. Semiconductors, especially, nearing that zone of resistance that we're seeing, and look how many times it's been touched. So it's a very valid zone that we're kind of coming up against here. And even with that last kind of push up, we saw momentum even confirming that a little bit as well, reaching those overbought levels. But something that I've noticed, especially over the last month or two or so, technology, which obviously semiconductors kind of falls into that space, technology has led this run up on a relative and absolute basis as far as just outperformance versus the index. So semiconductors, if that's kind of like an area we're watching to catch up, reaching those resistance levels, I think it also makes sense to watch technology as an entire sector here as well.
I can see why. The outperformance is notable. Now, this is standing out to me. There's a couple of things there. Let's go quickly back to the semis. I noted that the semis have maintained and held this level. We've gone sideways for about 2 weeks. So we can get sideways consolidations like this. This is perfectly appropriate in a bullish trend, allowing that orange 20-day moving average to catch up with the trend here, of course. So that's not a negative development. The longer we maintain at these upper levels, the more bullish that gives, the more bullish impression that offers traders, I would say. Notice, again, that 20-day real aggressively upward sloping through here. The other thing that stands out, Rachel, is that we made these intermittent highs in the last week or so, and we've really gotten new highs in the RSI. So some traders would tell you that those are validating that price movement, validating even the sideways consolidation, and it might give bullish semi-traders here, Rachel, reason to believe that a breakout is coming, more so than the potential for a rejection at these levels. What about your thoughts on that kind of development when you consider where the RSI is, where we've been in price, et cetera?
Agreed, because you can even see there's higher lows made in the RSI as well. And like you said, momentum is confirming trend, which is a lot of times, price obviously comes first, momentum comes second. So trend traders will be looking at trend first and foremost. But like I said before, momentum is going to be that yellow warning flag or confirming flag type signal. So the fact that we see momentum getting overbought here and confirming as well, it is definitely notable. And those last couple indexes that we looked at, I know we gave some support levels there, but they are heavily weighted towards technology. So if this group, especially semiconductors, can kind of get a footing here and break above that prior resistance, we may see that take the rest of the index with it when it comes to market breadth.
I've got something that I think is a little interesting, though, Rachel. You notice we have the RSI here giving you a validation of that recent high. We looked at the tech, looking at technology here, technology telling us something a little different, right? Because the last high was a higher at the RSI, even though price continued higher. Yes, it got into overbought, but that's still a lower high. The other thing that I noticed, though, is that software, also part of that technology space, is making another similar move, right? You're seeing that it's kind of settling out. So the reason I bring it up is that obviously there are industry groups within tech, and it seems like as strong as software has been, software is taking its breather while semis have been taking a breather as well. But the semis seem to have that leadership appeal to them at this point. And again, I'm basing that off of what you see out of the RSI, the holding levels that it has managed to maintain. If the trend maintains, it seems as though we could get further leadership from the semis. And that wouldn't shock you, would it, Rachel, on a potential for a breakout through levels that we really haven't seen in the semiconductor space for quite a while. I mean, we have been banging our head on this range a number of times. So it is a significant area of resistance. And one thing we know about significant resistance is that when it breaks to the upside, it can be powerful.
Definitely. And I think it speaks also to just the nature of sector rotation, why it's so important to have a process. And in this case, we're kind of taking a top-down approach in this case. So we're looking at the indexes, we're looking at those sector groups, and then we're looking at the industries within those sectors. And obviously, different points in the cycle, different areas, we're going to have rotation and strength go from one sector or industry group to another. And that's just the nature of a bull market or a bear market. But it seems to be kind of like what we're seeing, rotation happening within the information technology sector, and we're probably seeing that in a lot of other groups as well if we look a little bit under the surface.
Yeah, the thing that stands out to me today is the movement relative to these laggard groups. Utilities and real estate are both your biggest upward momentum movers. We've also got, let's see here, this is the discretionary, which is actually holding up better than you might expect here, up better than 0.75%, hanging in at an area, a very intriguing spot from a trend standpoint here on discretionary, Rachel, because look at that 200-day. Got a casual upslope to it. It was resistance for us. It could potentially be support, looking like a bounce off of that level there. So I'm kind of encouraged by what I'm seeing out of discretionary at a time I would not have expected it. But all of this action here, which is basically, going back once more to the May 12 gap right here, everybody. We made a huge gap May 12. Discretionary, man, this looks different than everything else.
It definitely does. I think this is one of the most important groups to watch as well, because consumer discretionary also is one of those, like what we call quote unquote risk on type of groups, where if they're still maintaining some bit of leadership, because obviously consumer discretionary is where we spend our discretionary income. So if they're maintaining leadership, that's something that bulls will want to see in a bull market, rather than seeing rotation to more of the risk off, or what we would call like defensive type groups. And it looks like here in this more cyclical area, price is really hanging in there above that 200 days. So I think that is a pretty pivotal level for consumer discretionary to hold.
Have to agree, of course. And needless to say, our viewers are paying close attention to the space. Why don't we just look at the leader there today in discretionary, Tesla, and the discussion around robo-taxis breaking through a potential zone of resistance here, Rachel, with some conviction today, moving through the 20-day, which could have easily been resistance. I mean, look, it's been resistance for the better part of the last week and a half. 1, 2, 3, 4, 5, 6 tests with banging its head right on that 20-day. Man, that looked consistent until all of a sudden it wasn't today.
Exactly. It looks like today looks a little bit different. And if we even switch down to one smaller time frame too, you'll see it looks even more evident. So if we go to like a, even 5-day, but I was even looking at the 20-day hourly, We can see that that level was touched so many times, and then just this past hour, I guess, past half hour of trading, especially with the market being open, but the past hourly candle that we saw with Tesla really broke through that resistance level that we're seeing there.
Wow, that is interesting. Everybody knows I love looking at those intra-period time frames. I've got some notable moving averages on here. They're a little bit speedier than most would be. These are essentially, I've got since we're on an hour-long bar, I've incorporated 65-hour moving average, essentially. That's a 10-day. The 130 hours, that's a 20-day. And then 325 hours would be about a 50-day, if I'm not mistaken. So, just trying to get some understanding of the price action relative to the daily chart. This might be a way for consideration, but it's clear breaking that downtrend line here over the last week was the momentum-based move. If we kick back to the 5-minute bar, Rachel, if you were watching this here on the 5 minutes, you really, right off the open, you were afforded a quick chance that first three bars, basically the first 15 minutes of trading here. Let me fix that. Go back to auto. Yeah, look at how well it handled that, though. Strong gap, sideways for 3 bars, new bar high. Excellent price action here on the intraday start this morning. That is pretty notable, isn't it?
Definitely. It cleared its way through resistance 1, and it's looking like it's working its way towards resistance 2.
Yeah. Fun stuff gets back to why Rachel and I watch charts, obviously, as traders and technicians. This is what gets our excitement going, right? We love watching charts and then breaking it down off of a daily into intra-period if you're looking to try and manage your trade via intraday price action. It can really aid you along the way in locking in as much profit as you can if you're looking at these intraday time frames, or it can also give you excellent entry signals in the shorter term if you're looking for that. That's not necessarily for all. As we know, not everybody wants to trade as actively as some do. So I just try to bring this in where we can. So let's see what else we need to cover here. I did see we have a survey, so needless to say, we'd love to hear from you there, everybody. Take a minute, if you don't mind, letting us know what your thoughts are on the segment here. You can click that link now, and it's going to open up in the in a browser window right next to this one, and you'll be able to get to some score for us, or even some notes if you'd like to let us know after the fact how things went today. Rachel, some other stocks in the news since we moved off of discretionary and looked at Tesla. Why don't we hit up some other stocks in the news? One of those is a big mover today, is HIMSS. We heard right ahead of market open that Novo Nordisk has ceased the relationship with HIMSS, and it sent HIMSS on a tumble. We are off 27%. We, at this moment, sitting on the 50-day moving average, been down quite a bit more, hit 44 on the downside here, Rachel. But obviously, this was thought to be a big chunk of their opportunity in the marketplace, offering the Wegovy to its customers, and that relationship is now over, and you can see traders adjusting price action as a result.
Exactly. Maybe some type of buy the rumor, sell the news type of reaction there. And it's funny that price found support right at its 50-day simple moving average. And so far, obviously, only in the first 33 minutes of trading, we see it forming some type of hammer-shaped pattern. Obviously, candlestick pattern shape may look a little bit more different at the end of the day, but so far it looks like price reacted, touched those lows, and is now trading near the higher part of that range that we saw. But obviously, quite a bit of reaction that we're seeing in HIMSS.
Really is. And of course, if it might be too late from a coverage standpoint, if you were long heading into this, it might be too late to be a seller if you like the 50-day in particular as support. But if you were wondering, hey, I'm not feeling as good, for obvious reasons, price action will dictate some of that for you. But if the news specifically is a reason for you to exit your position, that would be cool too, and totally fine to make a decision based on that. But if you're looking for a potential area for a bounce. Obviously, holding the 50-day becomes imperative for him today. Any movement that gets you back into what was the uptrend line might be that opportunity to capitalize and take position off. It doesn't mean it can't get itself right back into this ascending triangle pattern that we had seen, but at the same time, what was support can be found to be resistance after a breakdown. So be considerate of that. We could get a continued selling. It's way too early to know for so many traders. So just know how you want to move on here. Maybe a close below the 50 would be reason to sell some today. Maybe you've already done that. Maybe you've already taken your risk off the table, but it looks like it's going to need a new narrative or a new story that's going to give it an opportunity to get back into what was developing as what appeared to be a pretty nice cup and handle, and yet it broke to the downside. It's a great reminder, Rachel, that no matter how well we plan for the trade, news will drive markets, isn't it?
It is correct. And it's also another reminder that patterns are never guarantees. Sometimes patterns fail. It may look like a cup and handle, but it may fail and break down. So we just have to manage accordingly and stick to our plan.
That's the truth. Not everything works every time, as another good reminder. Let's hit up some other ones here, Rachel. One that has recently broken out in that semiconductor space is AMD. I'm going to let you speak to the chart on this because it certainly looks a lot different than it has. But the news on this is an upgrade out of Melius Research today, upgraded to buy from hold. New target. Big bump here, up from 110 to 175. Now, we know those are never guaranteed levels. Those are just estimations from the fundamental analysts. But, Rachel, there's been some developing improvement on this chart for a while now.
Definitely there has. And I think this has been one of the ones you and I have talked about before in the past too, Kevin. And what we've seen just even over this year, I mean, even at the start of the year, we saw this bottom reversal pattern taking shape where you have a couple like right and left shoulders. We have a head. So it's almost looking like an inverse head and shoulder pattern that's kind of playing out here where we saw a break above that neckline, probably right below 120 or so.
Yep.
And then we had a powerful move above its 200-day simple moving average. And so I guess just from a pattern standpoint, if we're looking at the depths of that bullish base that we saw from nearly 120 to the lows of 76, and you take that depth and kind of project it upward, I'm almost wondering where that lands us as far as where they could be placing their price targets or where price could possibly run into that next level of resistance on those prior highs back in November.
Looks like if we did it as a measured, if we are validating this neckline at around 118 or so, yeah, would give us about 160 for a potential measured move target. The last high up here is 175. I think that's going to be coinciding with their price range approximation. But I think, Rachel, isn't the bigger takeaway all of this action recently above the 20-day? One leg here, another higher low, another higher low, another higher low. So there's been a clearly developing new trend here, and it's working really hard to maintain that 20-day, which got going before the market. What was the big day on, it did not get going before the market. My apologies. We're behind schedule here. We got the 20-day on the broad indices, the S&P and the NASDAQ 100, both on April 13. So we're about 10 days behind on AMD. But as good as the daily chart looks, Rachel, from a bullish standpoint, good in the sense that we've got a possibility for a new developing uptrend. Look at this on the weekly. This is where I think traders are really paying attention because that is a significant developing downtrend that is in process of having broken. Now, we do have the 100-week right above us at around 135 or so. But as always, I love to bring in these longer time frames as a reminder of historical price action having an impact on current price action.
I love that you brought up that one as well because, Kevin, you know that's one of my favorite things to do is to zoom out, look at price on different time frames because it could be telling a completely different story than what you're seeing on the shorter term. So it's interesting here in this case, especially with AMD, that you're almost getting an alignment across time frames or an alignment in the story that the chart's telling you. We saw that breakout on the weekly. We saw that breakout on the daily. And then obviously we've seen the stair step higher with that 20-day simple moving average as well. So it looks like for longer term investors who would just be looking at this specific chart here, they may be looking at that next weekly moving average as that next level of just shorter term resistance here as well, which we're pretty close to on the weekly.
We're getting right there, right around 135. And, for a long time, Rachel, that was support. We broke it back in April of 23 or May of 23, excuse me, broke out, pulled back to it, and then made another push, real strong push, mind you, all the way up. Now, this, as good a move as this was, it did a complete round trip and made lower lows thereafter. So, this is by no means telling us that there's only upside from here. We are certainly not saying that, but it is a development that is certainly short-term bullish on AMD here, and the upgrade today is absolutely giving a little bit of lift, up 3 3/4. Now, another one that's moving, and this one may not make it on your radar, everybody, but Estee Lauder has made a significant move. They are also upgraded today by Deutsche Bank, upgraded to buy from hold. New target here also up significantly from 71 up to 95. The firm sees increasing evidence that the company's strategy is diversifying well beyond their China, beyond China specifically, and travel retail, and it's offering future growth that is underpinned by moves to accelerate innovation and migrate decision-making geographically closer to where business gets done. Now, I don't know how that's going to improve their bottom line necessarily, but Deutsche Bank likes it and has upgraded it as well. And Rachel, again, we're going to look at this on a longer-term chart, because when you see a stock trading above its 200-day for the first time in more than a year, it should be kind of a heads up, right? And you can see here that we are looking at a very long-range downtrend move, and we might be in process of breaking it.
It looks like we may be in that process. That's kind of crazy how, like I said, just zooming out like you like to do, like I like to do as well, it just shows where those longer term, very pivotal levels may lie. So it looks like price could be and has been crafting out this basing pattern that we've seen here after a sustained downtrend for the last few years. And this is kind of where one of those phrases comes from, where leaders become laggards, laggards become leaders, and vice versa.
Yep.
So this could be those times where we could see a little bit of a bottoming reversal here in this Estee Lauder.
Again, it doesn't make, I noted that somebody was in here, very kind comment about hitting the stocks that everybody wants to talk about. I know everybody loves to see charts and stocks that they trade. And when we have news pieces, I love to bring those charts to you all. But, this one stood out to me as well, obviously for the upgrade, but more significantly because of the tremendous downside trade we've seen here, $375 to under $49 a share, Rachel. That's craziness. Now, whether you think this is an absolute low, an excellent entry or not, there's plenty of levels that traders can build in from a trade standpoint that would give them a trade opportunity. And I'm looking at it, that upside resistance that I drew in, coincident with the 100-day moving average in green there, right around 106 or so. Obviously, by no means does this mean it has to go up there, but if you thought it could get there, you've got a potential for a positive risk versus reward opportunity here. If you basically said, in order for me to be out of this trade, maybe I move on if it closes back below that short-term moving average. The one in light blue is the 20-week moving average. That would be reason to move on. That's about 12 or 13 points away. But if it could make 30, Rachel, that's still good risk versus reward. Doesn't mean it's going to play out, but it's at least ways that traders will consider their opportunities, right? If there's legitimate upside that is at least 2 to 3 times what your downside risk is, a lot of traders will at least consider a trade there, given the opportunity to build it properly.
Of course, because a lot of times trading is about those probabilities, and you want to see for each unit of risk, you want a larger unit of reward. So I think that risk to reward setup is definitely something that a lot of traders will be looking for, not just in Estee Lauder, but as you're continuing to refine and build your trading plan.
True that. Well, here we are, everybody, at the close of our show. I just wanted to roll through the S&P, showing you some green here. We're up 0.5%. NASDAQ up 0.2% now. And looking at the Russell, up almost 0.5%. Seems like short-term bottoms have been tested and held to this point. Now the question becomes, does the remainder of our day continue to give us this bullish and optimistic viewpoint to the price action as we head towards lunch, and we'll see how that goes, obviously. But as always, Rachel, a wonderful discussion on a Monday with you. I'm so glad to have you in my consistent rotation. Thank you so much for being here.
Thank you for having me, and thank you for everyone that helped out with the show, and thank you everyone for joining.
Absolutely. We love, obviously, a big thanks to Mike Fairborn in chat, but hearing from all of you really makes this conversation between Rachel and me go well. We love your commentary. We like to bring that into our discussion. Take a minute and give us some feedback on that survey. That is greatly appreciated. You can click that link and offer your thoughts, or just a score if you'd prefer. Take a moment and follow Mike and me on X, Mike Fairborn CS, Kevin Horner CS. And if you like today's discussion, hit that thumbs up button down below for us as well. We're going to get this into the archive for you here a little later this morning, and that'll help us on a replay basis. So with that, we'll wrap it. Thank you all for being here. Have a fantastic Monday. We look forward to seeing you all again real soon.